Um, Mike Seemuth, we're going to go to you with story number 5. This story you wrote, it appeared in the Commercial Observer. I'm going to read you the headline first, couple graphs, and I want you to provide some insight. You wrote the story, you might not be able to comment, but let's see what you learned when you were reporting it out. Again, Commercial Observer headline: spiking premiums lead some Florida owners to forego flood coverage. Subhead: despite Hurricane Ian's recent warning, some property owners are choosing to skip coverage due to the cost. Here we go. First couple graphs. Mike, how expensive has property insurance premiums gotten in South Florida? So high that some property owners forego coverage. When Hurricane Ian made landfall in Southwest Florida as a Category 5 storm in September of last year, coastal storm surge and swollen rivers, canals, and bays flooded towns from Sarasota south to Naples, and especially Lee County, which leads all of Florida counties in the number of property insurance claims that stem from Ian. The story goes on to say, policyholders in Lee County, including such hard-hit places as Cape Coral, Captiva Island, Fort Myers Beach, Pine Island, and Sanibel Island, have accounted for 1/3 of the 700,000 plus property insurance claims in Florida arising from Ian. According to the Florida Office of Insurance Regulation, in Florida, property insurance covers windstorm risk, while flood insurance is sold as a separate policy. But coastal and inland flooding may have caused as much property damage as Ian's destructive winds. Up to half of these flood damages are uninsured, according to the estimate from CoreLogic, an Irvine, California-based real estate data provider. Mike, wow, people are taking a risk of riding out a storm. Hopefully they've left if they're being notified by the government to get up and leave, because their life is much more important than any kind of damage. But by rolling the dice and trying to survive and not getting this insurance coverage, they're putting their fortunes at risk. How, why, and is there anything in the process to try to eliminate this risk?
Well, to me, one of the more interesting risks that I uncovered in reporting this is that if you have a luxury home, let's say, $1 million and more value, the standard FEMA program is problematic because it provides coverage up to $500,000, and there's a 50% rule, which says that if whatever repair you're claiming is going to increase your property by 50% more in value than it was prior to the storm, you can't do it. So this forces a lot of higher end homeowners into the excess coverage market, I think is a term that's used to cover, but it's extremely expensive. I had a guy, a lawyer in Naples, tell me that he represents people that have high end properties that were looking at paying, $100,000 to $200,000 for excess flood coverage on top of what you can get from FEMA. So, when you're looking at those kind of numbers, you're a little more motivated to take a risk. I also interviewed, from the commercial side, I interviewed the lady who runs the Naples Soap Company, which has a number of retail stores. 4 of them were flooded out and had to be completely rebuilt. But she told me, it cost $60,000 to rebuild a store, and she says it was going to be costing $30,000 to protect. I don't know if it's probably more than one property, but a lot of people have made this calculation and decided to take the risk. This one guy I talked to who has rental homes on both coasts, about 11 of them altogether, never buys flood insurance. He said he doesn't buy wind either. He said he would if he had mortgages on the properties, which is normally a requirement if there's a lender involved. But if you're a cash buyer, you can pay your money and take your chances. It's a tough situation.
Mike and the Roundtable, let me throw it out to you. I've been in Miami since 1993, so 30 years or so. And I can remember back to the 04-05 period when a number of storms just ravaged the state of Florida. You had Gene, you had Wilma, you had Katrina, you had all these storms that basically came rolling through and just created a lot of drama, created a lot of issues back then. And what I remember, though, most importantly, is we had a real estate run going. 2002, 2003, 2004, 2005. And it seemed like when Wilma came, which was late in the hurricane season of, I want to say 2005, basically insurance went on lockdown. And after that, it never really came back. And that is what I would argue led to basically a flattening of the market before ultimately a free fall of the market. Can you guys see anything similar to in terms of insurance costs, the availability of insurance impacting somehow this current hot real estate market where there's no supply and prices are sky high? Any similarities, or is this a completely different situation?
The National Flood Insurance Program, which is a national program, government program, reevaluated its whole methodology for pricing and evaluating flood zones. And what happened before was that Floridians were able to get cheap flood insurance, which basically the federal government subsidized cheap flood insurance for everybody, and people got used to it. It was like $500 a year. I remember, this was 20 years ago. You'd pay $500 a year, and you had flood insurance, and basically the federal government subsidized, everybody here. Well, if you live in Oklahoma or Nebraska or, places like that, you get kind of ticked off that you're subsidizing Floridians' lifestyle in the sun, So the whole flood insurance program got reevaluated, and now the rates are more like reality now. So Floridians are shocked, because they're getting these premiums that are sky high. And guess what? That's the real cost of insurance. It's not being subsidized by the federal government anymore. And so that I think Floridians had it good for a long time, and now we got to pay our fair share into the program. And these storms that keep rolling through, we're not, people aren't going to, from outside of Florida, aren't going to keep bailing us out.
Gentlemen, is there any possibility that the high price of insurance and the availability of insurance could somehow stall what's a very hot real estate market? Or do you think the private sector and the market will simply take over, regardless of the cost, just to keep the real estate circus going in the state of Florida? Because it is one of the most critical industries in the state.
I've wondered about that myself. I would imagine if you're a newly arrived New Yorker, you might have quite a shock, a sticker shock,